Welcome back to the Daily Crypto Roundup. And before we get into today's market action and headlines, we just want to start by wishing everyone listening all the best for the new year. Whether you're tuning in from work, commuting, traveling, or just keeping an eye on the markets over the holiday period, we really appreciate you being here with us. Coming up in today's episode, we're going to cover a broad range of stories shaping the crypto market as we head into the new year. We'll be looking at crypto prices today, what's driving sentiment, and how traders are positioning themselves as liquidity begins to return. We'll also cover developments around exchange-traded funds, corporate treasury moves, shifting regulatory pressure, political involvement in crypto, and some fascinating global adoption stories that show how far this space has come. Before we dive into the prices and the news, just a quick reminder about this week's XRP giveaway. As we head into the new year, we're doing something a bit bigger. This Friday, we'll be selecting 2 people to receive 10 XRP each, and another 2 people to receive 5 XRP each. All you need to do to be in with a chance is leave a comment on the episode. Share your thoughts on the market, the stories we're covering, or what you're watching as we move into the new year. We'll pick the winners directly from the comments, so make sure you get involved. And finally, if you find the show useful, we'd really appreciate a 5-star rating. We're aiming to hit 300 5-star ratings over the next week or so, which would be a fantastic milestone as we head into the new year. We may even do another giveaway to celebrate it, so your support really does matter. Okay, let's get into today's market. Looking at prices right now as the market pulls back, Bitcoin is trading around $87,500, showing a modest decline from earlier levels as traders take profits and liquidity remains subdued. Ethereum is currently around $2,965, also lower on the day. Binance Coin is trading near $865. Solana has eased back to roughly $125. XRP is near $1.80, while Cardano sits around 33 cents. Dogecoin is trading near 12 cents. Polkadot is around $1.77, and Chainlink is about $12. Tron remains near 28 cents. These levels reflect the broader market cooling off after recent bounces, with dips being orderly rather than chaotic, a sign of cautious repositioning rather than panic selling. Now let's move into today's headlines. One of the bigger themes emerging today is how businesses and institutions are grappling with crypto accounting. New commentary suggests that forcing digital assets into traditional accounting frameworks may be doing more harm than good. The argument is that crypto doesn't neatly fit into legacy financial categories, and trying to shoehorn it into outdated systems could slow innovation and adoption. As regulation evolves, this is likely to become an increasingly important discussion, particularly for companies holding crypto on their balance sheets. Zooming out to the broader market picture, year-end reviews are highlighting how Bitcoin, Ethereum, and major altcoins are closing out the year. The big takeaway is that while prices haven't delivered fireworks into year-end, the market structure looks healthier than it did earlier in the cycle. Volatility has cooled, forced liquidations have dropped off, and capital is becoming more selective rather than speculative. We're also seeing renewed attention on exchange-traded funds. ETF filings continue to surge, and analysts note that institutional interest hasn't disappeared. It's simply waiting for clearer regulatory signals. Bitcoin ETF flows remain a key data point for traders, and even modest inflows at this stage are being interpreted as a sign that larger players are positioning quietly, rather than chasing momentum. Another important development today is the way corporate treasuries are adjusting their crypto exposure. Some companies are continuing to accumulate Bitcoin, viewing it as a long-term store of value, while others are becoming more cautious, pausing further purchases without fully exiting their positions. This divergence highlights an important shift. Crypto is no longer a binary decision for companies. It's becoming a managed asset class, treated with the same strategic nuance as any other balance sheet holding. On the political side, one of the more eye-catching stories today comes from the United States, where Trump media has announced plans to distribute a new digital token to shareholders. Regardless of personal views, this is significant. It shows that crypto remains firmly embedded in political and business strategy, and that digital assets continue to be used as tools for engagement, loyalty, and capital formation. The market response to this kind of announcement is often muted at first, but the long-term implications around legitimacy and mainstream exposure shouldn't be ignored. Internationally, we're also seeing fascinating developments. One story gaining attention today focuses on a small Himalayan kingdom that quietly made a major bet on Bitcoin and appears to have benefited from it. By integrating crypto into its national strategy, including digital identity initiatives and sovereign holdings, the country offers a rare real-world example of state-level adoption that isn't driven by hype, but by long-term planning. We're also seeing movement at the intersection of payments and crypto, with major firms exploring new partnerships and reward structures tied to Bitcoin. These developments don't always move markets immediately, but they matter because they expand access and normalize crypto usage in everyday financial products. One of the more interesting corporate stories today involves a health and wellness company backed by David Beckham, which has confirmed it will no longer be buying additional Bitcoin, despite previously holding Bitcoin as part of its treasury strategy. The company hasn't sold its existing Bitcoin holdings, but it has made it clear that further accumulation is off the table for now. What's notable here is the reasoning. Rather than signaling a loss of confidence in Bitcoin itself, the move appears to be about risk management and balance sheet discipline. With Bitcoin prices significantly higher than when many corporate treasuries first entered the market, some companies are choosing to pause new purchases while they reassess volatility, cash flow needs, and regulatory considerations. This reflects a broader shift we're seeing across corporate crypto adoption. Companies are no longer treating Bitcoin as a speculative bet or a headline-grabbing move. Instead, it's increasingly being managed like any other strategic asset, something to hold, rebalance, or pause exposure to depending on market conditions. The fact that a high-profile, celebrity-backed firm is taking this approach highlights how much more measured corporate involvement in crypto has become compared to previous cycles. Before we get to the rest of the stories, we are going to pause here for a word from our sponsors. Stay with us. Picking things up from there, one of the most interesting undercurrents in today's market is how selective participation has become. Even with prices moving higher, we're not seeing a broad rush back into every corner of crypto. Instead, capital is flowing into specific assets and narratives that traders feel offer a clearer risk-reward balance heading into the new year. That kind of behavior is often seen when confidence is rebuilding but hasn't yet tipped into full-blown enthusiasm. This selective strength tells us something important. The market isn't chasing blindly. It's responding to signals, futures positioning, funding rates, and relative strength across major assets. Bitcoin continues to act as the anchor, with Ethereum following closely behind, while other large-cap assets see intermittent interest rather than sustained momentum. That's a sign of a market that's thinking, not reacting. Another theme that's coming through clearly today is how institutions and larger players are approaching crypto with far more nuance than in previous cycles. We're no longer seeing binary decisions in or out, risk on or risk off. Instead, companies and funds are adjusting exposure, reallocating capital, and waiting for clarity, rather than rushing to front-run headlines. This is especially evident in the way corporate treasuries are handling Bitcoin holdings, with some continuing to accumulate quietly, while others pause without fully exiting. That shift matters because it changes the rhythm of the market. Big moves don't always come from loud announcements anymore. They often come from gradual positioning that only becomes obvious in hindsight. Today's price action fits that pattern, not explosive, but constructive. At the same time, exchange activity is telling its own story. While volumes remain lower than peak levels, there's evidence of improving liquidity conditions as more participants return from the holiday period. That doesn't mean we're back to full-strength trading yet, but it does suggest the worst of the seasonal slowdown is passing. As liquidity improves, price discovery becomes more reliable, and moves tend to reflect broader consensus rather than isolated flows. Turning back briefly to regulation and oversight, today's enforcement and policy-related stories reinforce a key point. Crypto is no longer operating in the margins. Governments, regulators, and financial institutions are deeply engaged with this space, whether through enforcement actions, policy discussions, or direct participation. While regulatory pressure can create uncertainty in the short term, it also signals that crypto has reached a level of importance that demands attention. Political involvement in crypto continues to be a recurring theme as well. Announcements like the one involving Trump media highlight how digital assets are increasingly used as tools for engagement and branding, not just speculation. These moves blur the line between finance, politics, and technology, and while they don't always move prices immediately, they contribute to the broader narrative of crypto's integration into mainstream systems. International adoption stories also deserve attention, particularly those that don't follow the usual script. When smaller nations or regions quietly implement crypto as part of long-term strategy, rather than chasing short-term gains, it challenges assumptions about where meaningful adoption will come from. These stories don't always dominate headlines, but they often have more substance than louder announcements elsewhere. On the consumer and payments side, partnerships and integrations continue to expand. Whether through rewards programs, payment rails, or infrastructure upgrades, crypto is steadily embedding itself into familiar financial experiences. This kind of progress is easy to overlook when price action is muted, but it plays a critical role in long-term adoption. It's also worth noting how market sentiment has shifted from fear to patience. Earlier in the cycle, sharp moves often triggered panic or euphoria. Today, reactions are more measured. Traders appear more willing to wait, assess, and reposition, rather than chase momentum. That maturity doesn't guarantee higher prices, but it does suggest a healthier market structure. Another story worth flagging today involves Ripple and an upcoming XRP supply event that traders are already watching closely. Ripple is scheduled to unlock around $1 billion worth of XRP from escrow at the very start of 2026 as part of its long-standing pre-announced release schedule. These escrow unlocks aren't new, and they don't automatically mean selling pressure, but the size and timing of this one matter, especially as markets reposition heading into the new year. Historically, these releases have often been partially priced in, with Ripple typically relocking a portion of the unlocked XRP rather than pushing it straight into circulation. Still, events like this tend to attract attention because they affect supply dynamics and short-term liquidity. With XRP already seeing tightening supply movements elsewhere in the market, this upcoming unlock adds another layer to how traders and holders are thinking about positioning into January. It's not a bullish or bearish signal on its own, but it is a meaningful data point as we move into 2026. We also want to say thank you again to everyone who supported the show, especially over the Christmas period. Keeping the Daily Crypto Roundup going day after day has brought in a lot of new listeners, and we're genuinely grateful for the engagement. If you're new here and haven't hit follow yet, please do. It really helps, and it means you won't miss the daily updates. That's it for today's Daily Crypto Roundup. Thanks for listening, and from all of us here, we wish you a very happy, healthy, and successful new year. We'll be back tomorrow with another full update on everything happening across the crypto markets. Once again, all the best to you and your families, and as always, we will see you at the top.